Hello and welcome back to the Unofficial Shopify podcast, your go-to show for all things e-commerce. We're going to dive into the best strategies and insider tips to make your online store thrive. Oh, wait, that's every episode. Today is no different. I'm your host, Kurt Elster.
Check nasty.
And today we are joined by none other than Byron Myers, a recognized Entrepreneur of the Year in one of Inc. magazine's 30 under 30 coolest entrepreneurs in America. I wasn't sure if that guy, if he was messing with me, and I Googled that as a real thing. Not only did he co-found a medtech firm, Inogen, while in college and grow it to over $360 million in annual revenue, he also runs a successful Shopify store, GlimmerWish, that's now at $1 million run rate. And so today, Byron is going to share his journey, his experiences, and most importantly, he's going to dive into profit optimization with us. That has become his passion and specialty. So if you've ever wondered how to make more revenue, this episode is going to be a must listen. Thank you for joining us, Byron. We're excited to learn from you and some of these profit optimization strategies.
Thanks for having me, Kurt. I've actually been listening to the podcast for a couple of years now. I think you're doing a great job. You're helping a lot of people. So it's an honor to be on the pod today.
Oh, thank you. I appreciate it. All right, I'm going to open with a tough question. I don't know if you're ready for this. Unicorns or mermaids, and why?
Yeah, great question. So GlimmerWish is all about unicorn and mermaid hair care. I admit that's a big departure from medtech and medical devices, my first venture, but this is a family affair. My daughter is the founder of GlimmerWish, and she's all about unicorns and mermaids. So that's how we got here.
And clearly, it seems like your daughter was the inspiration for this, but what inspired you to start GlimmerWish? It's hair care. It seems targeted younger. Tell me about it.
Yeah, the story is, my daughter, she was 10 at the time. Now she's 14. She always wanted these fun hair care products in the store, right? But my wife wouldn't let her get those fun hair care products because they had toxic chemicals in them. And so it was her idea, let's make something, fun that kids want and that moms will like too. So we'll have clean ingredients, no toxic chemicals, but it won't be the boring clean products, right, that kids don't want. It'll be something fun like unicorns and mermaids. So we set out to do that, partly for her entrepreneurship education and partly because we saw there's a real need here. No one is doing this. So we custom molded bottles into mermaids and unicorns with clean formulas, and we launched last August.
And how's it been going? That's not, that's about a year now.
Yeah, it's been going great. As I think every e-commerce store does, we've definitely had some ups and downs, but we're at $1 million run rate now. We have a lot of cool and exciting things, in front of us. So it's been going great.
People are so unwilling to share the downs. You said we've had our ups and downs. What's one of the negative experiences that happened where you went like, yeah, maybe we should pack it in?
Yeah, well, I think, like most brands, we had sort of our run in with the meta data inaccuracies in platform. We were seeing a 3.5 ROAS in meta. But using Northbeam, our attribution system, we were seeing a 1.7 ROAS and 2.5 is our break even. So that was a big awakening moment. That's a problem. We were unprofitable. And so we really had to dig in and get serious about creative optimization, right? Scientifically test creative to know what is truly working and what isn't, instead of just throwing a bunch of creative at the wall. We've been able to solve that a bit on my own. We've been able to get back up to 2.9, but I think there's a lot more opportunity in front of us. We're working with a new agency now, just started working with them. And I think, it's all about creative testing. And I think they can get us to a whole new level here in the future.
Of the creative, it sounds like you've got some experience with this is creative that is middling. It works, but it's not strong enough to be profitable on new customer acquisition, which you don't want to be losing money making sales, right? But at the same time, you have a consumable good. So maybe, the thinking was always, at least when interest rates were low, were, well, we'll make it back up, on the second, third, fourth, fifth sale. Did you find that was the case, or were you thinking more, hey, let's just not mess with this? And then, ultimately what, before I ADD'd on that question, what's the creative that works?
Yeah. So to the first question, I always want to be at least break even on the first sale, even for a consumable good. I mean, I'm not really the type of person to say, we'll break even on the fifth sale. At some point, I think brands can get there with sufficient data where you have a high confidence interval where you know exactly what's going to happen. We're not there yet. When, we first launched last August, we were just doing, one-time purchases. A big learning we found was that, kids aren't taking showers and baths every day. So, these products are lasting longer than we thought before we're getting repurchases. So until we truly understand lifetime value, I really want to at least break even on that first sale. And so that's the goal. Any repeat purchases are just going to be upside then. That's where we would capture profit. And, we do that through email, of course, which is just, profit capturing machine. But that creative, there's a lot of brands have different experiences. For us, it's been a mixture of static images and that sort of influencer UGC type of video, but edited. So we tried just raw, UGC video, kind of like the TikTok style. It did not work for us. So we need edited videos with text on screen, sort of showing the problem, showing the solution, a mom talking on screen, showing kids using the product, really kind of running through, the full experience for someone, answering a lot of questions in that video, and then remarketing bottom of funnel with static images.
When you said edit the video, so you're taking UGC or influencer created video, something someone else created, but then like that is just your starting point. And so you're going to edit that and make it, quick, slick, put text over it, make it a little more commercial, it sounds like. Are you doing the editing? Do we have an AI doing it, outsourcing it? What's the solution here?
Yeah, really a mixture of all of the above, except AI. I haven't gotten there yet. But yeah, we're doing an influencer gifting campaign. So we have a large amount of just raw influencer video that we have to use. And a lot of brands can make just that raw video work. It did not work for us. So we do have to polish up that raw video a bit for it to convert. So we are putting text on screen. We are mashing up some of the videos together, making it a little more slick, as you say. And so I've done some of that. Sydney, my daughter, is an amazing, content creator. And so she's done that as well. And we've used some third-party services like Constant Creative, and some other editing services out there to help us with that.
It's quite the transition to go from a med tech firm, that's 9 figures, to starting an e-commerce brand with your family, with your teen daughter. What's that transition like for you?
On one hand, it's been incredibly humbling. I was in charge of, more than 500 people. I had the authority to make, these massive decisions. And when we started GlimmerWish as a family, I wasn't the boss anymore. Everyone in the family had an equal opinion, and we had to work out, how is this all going to work together? But on the other hand, of course, and I think more importantly, it's just been incredibly rewarding. I think more rewarding than starting Inogen and taking it public. Even though GlimmerWish is small, just seeing the impact that it's had on my daughters, their education and entrepreneurship and business, and building something together has just been really cool to experience.
Yeah, exposing them to that now, even if it doesn't work out, they now know this is an option, and this becomes real and accessible for them. And they're no longer in a position of like, well, I have to wait for permission. Because that's like a lot of the issue people have with starting a business is they're like, well, is it there like a license or something I need? But when you expose them to that stuff early on and develop that curiosity, now that just becomes a natural thing for them as adults. Is like, that is career paths to consider. What do you think a few of those, just off the top of your head, what do you think some of the practical skills she's picked up are because of this?
Well, it's been able to, I think, connect the dots between school and just real world applications. And, that's what I struggled with in college. That's why one of the reasons I fell into starting Inogen, because I couldn't, just be satisfied with a theory in school. I needed a real world application. So, she's in math and we're doing math problems in GlimmerWish, right? I mean, we're looking at our COGS, we're looking at our profit margins, we're calculating percent changes, and looking at our paid, ad performance data. And so everything to me comes down to data and metrics. And so just showing her, well, yeah, what you're learning now in school, you can use this in the real world, and here's how. And I think that's just been a light bulb for her, that it's not meaningless what's happening in school. I'm going to use this someday when I'm running my own business.
It's so powerful and valuable, because I struggled in school and I skated by on reading comprehension skills, and so it's just an average student slacking. But the stuff that was like, oh, this is immediately applicable. This is the things that are practical. Like in high school, I would get a little spending money from installing car stereos and stuff for people, and so I took a physics class. And in physics, it's like, oh, we learned, all kinds of things about basic electricity. And now suddenly it's like, well, that was immediately applicable to me. And so that today, that stuff has stuck with me. I often wish, like, when I was learning quantitative analysis in college, that I had those practical applications for it that I do today, because I would have been able to understand it so much better. It wouldn't have felt like a chore. There's so much value in entrepreneurship, in exposing kids to it when you can. So GlimmerWish, in such a short time, hitting that $1 million run rate, unusual and incredible. What do you attribute it to? How do you think you achieved it? Like, what is it? Just knuckling down on the data in Facebook?
Well, I think it always starts with product market fit, right? And unique value proposition. And we didn't do a lot of research there, right? Because we knew we were customers. So I think, I'm a marketing guy, but I do think people tend to go overboard in research a lot of times. And a lot of times you just need to go with your gut, and especially if you're the consumer, you don't need to do a lot of external validation. So we knew we had product market fit. And from there, once you know that and you have a compelling solution, it's just about testing the best way to cost effectively reach your target audience, right? And so for us, Amazon actually is doing amazing right now. So we're leaning into Amazon, leaning into what's working, and at the same time, continuing to optimize paid social, drive, their Shopify performance. And, we're split between Amazon and Shopify as our channels. So it's really, fundamental is just looking at the data, looking at metrics. It all comes back to that. And, getting into pricing, people don't look at data when it comes to pricing, but I'm sure we'll talk about that later.
It'll, I will right after this question. So it can't all be roses. What are some of the challenges you're currently facing with GlimmerWish?
Yeah, we're still, I don't think we're out of the woods on the meta performance and, profitably driving growth to our Shopify store. Our number one priority actually right now is lowering our cost. So we have to get our COGS down. We made some decisions to go to market, quickly with higher costs. But now that we've, established this can be a real business, we need to go back. We need to lower COGS and, get that in order so that we can scale. And then two, we just need to continue to just set that foundation on the creative level. Like we have tested some things in creative, so we know what's working, but we really need to expand that to really from the offer, the persona, every type of, click bait that we can come up with and really test, what is truly driving the conversion. That's a never ending process, but I think we still have to solidify that foundation from which to build. So those are the top two things we're working on right now.
So moving on to pricing optimization, how are you optimizing for price in GlimmerWish?
Right. So there is a mathematical process you can use to find the optimal price point, right? So this is not sort of a gut feel, exercise for pricing or just, sort of randomly through trial and error coming up with your price. There's a mathematical formula you can use. Now you need to have data to do this. So, as you're just launching a product to market, as we did with GlimmerWish, you use the tools you have available. And these are research tools and just traditional pricing strategy, like competitor benchmarking or cost plus, right? You want to be at a certain target margin, you know what your costs are. You do some fine tuning based on where competitors are. There's your price. You can launch with that. But as soon as you have enough data, and it can be from Amazon or Shopify, you can do this, regardless of the channel, and you have that data, you can go about doing this methodical process to calculate the optimal price point. And I did that with Inogen for years and years, and doing it with GlimmerWish now as well.
You mentioned that there's a mathematical way to do this. Can you explain it to me? But earlier I mentioned that I really skated by in school, and of those subjects, math was my weakest. So you got to really dumb it down for me here.
Okay. Yeah, in the course that I've created, it can get a little scary. There are derivatives and those things, so I don't want to scare off listeners. But in the course, we really kind of drill it down a step by step, and even have just a spreadsheet. So you don't even have to do that complicated math. You could plug in the data. It does it all for you. It takes the guesswork out of everything. But it really comes down to, the fundamental process of what you're doing is that you're creating a demand curve that is specific to your business. So that's, how the demand for your product changes as you increase or lower your price. It's that relationship that you have to find. And this is otherwise known as price elasticity. And so once you know your price elasticity for your product using this demand curve and really the fundamentals of economic theory, you can calculate the optimal price point that maximizes total margin. So, and to be clear, this is not just determining which test point is the best, right? You can run a few tests, see which one gives you more margin. That's easy. This process uses those test points, but you're not solving for the best one. You're using those to create your price elasticity, this relationship between demand and price, and then using that to plug in the calculations to find any price point along your demand curve that maximizes total profit.
So what are the data points I have to put in to calculate price elasticity?
Right. So you would run a series of tests, and you would essentially capture a price and a close rate, right? And so, this is interesting too, that I was surprised Shopify doesn't have a report showing close rate by product. I put in that feature request, so hopefully they'll get to it. But you can get this data from GA, and there's other free apps out there like the simpleshop.com, no relation, but there's ways to get at close rate by product. And so you test different price points and you have these close rates. And so from there, you can draw a demand curve essentially using those points. You can graph it in Excel with a scatter plot, draw a trend line between those points. That is your demand curve. Then from there, you start doing some math with equations. I can go through that if you like, but it gets a little out there.
Close rate is like conversion rate, but for a specific product. I have like X number of people view the product, and the percent of those that buy is my close rate for that?
Yes. Sorry. I say close rate because I'm old school. We used to sell over the phone. But yes, it's conversion rate. That's what I mean.
Okay. And in Shopify, how am I showing the same product at different price points?
Right. So ideally, and the way I did it at Inogen was simultaneously running different price points, right? And I'm sure you could help set up, people to show simultaneous price points, but most brands that I'm talking to, now don't want to do complicated coding, and put that investment into running, multiple tests at the same time. And so, the next best alternative is just to run those sequentially. So you would run one price, for a period of time, 2 weeks maximum for a month, and then run another price. And so you're capturing the price and the close rate from that first period, and then on the same product, changing the price, and ideally doing this at least 3 times. So you have 3 different data points and not just 2.
All right. So if I have one product and I'm going to price it like low, medium, high, and then I get I've got my conversion rate numbers for that. That's all I need to be able to put this into a scatter plot showing price elasticity?
Yes. From that, you can calculate your price elasticity. It's just the change in demand divided by the change in price. And you can scatter plot those points, right? So you have price on the y-axis, close rate on the x-axis. This is, in economic theory, this is traditionally the quantity of demand, right? But we're substituting close rate for quantity of demand, right? For e-commerce sellers, or conversion rate. I keep saying close rate. And then that line that you graph, right, should be a decreasing line to the right, as you lower price, close rate increases. And so if you have a fairly elastic product, which most products are, you're going to see that relationship take place. And so it's really sort of the slope of that line and that relationship, which is key, which then goes into your calculations. But that's specific to your product, your business, and that is your demand curve and how customers view your product and your pricing.
And so once I've got this price elasticity demand curve, it's like if it's more upright, that's inelastic demand, and then if it starts to get a little flatter, that's elastic demand. But when I'm looking at it, how do I know what the correct point is? Where this is the ideal price, where I'm maximizing the relationship between price and purchases. Because as it goes up, I'll get fewer people to buy, of course. So I want there's an ideal revenue generated if I get the pricing right.
Right. And you can solve to maximize revenue or to maximize total profit, right? And those are different price points. And so, if you're valued on revenue, or if you're a SaaS-based business valued on revenue, there's reasons why you may want to maximize revenue versus profit. But if you're, a typical e-commerce store, you probably want to price to maximize profit, but they are different price points. So from there, and you can edit this out if this is too complicated, but I will run through the process here. You have your demand curve, right? And so then you simply click on that demand curve in Excel, show trend line. And then that is the equation of the align, the old MX plus B line. Well, for now, we'll assume that's just a straight linear line and it doesn't have a curve to it. So that is your price equation. So from there, we take revenue. Revenue is quantity times price, right? So instead of quantity, we're using close rate. And so we insert our price equation into the revenue equation. So now we have close rate times our price equation. Remember, that's the trend line equation. So now that essentially turns it into a quadratic equation because we're multiplying close rate through. And so we have a squared component to it. And just hang with me here. So that's our revenue equation. And then we need to find marginal revenue. Well, the derivative of the revenue equation is marginal revenue. And so we take the derivative of that of that revenue equation. And this is what the spreadsheet will do for you. And then what economic theory tells us is that profit is maximized when marginal cost equals marginal revenue. That's, just straight from the textbook. So we take that as truth. And so we use our marginal cost. That's our cost to create one more unit. So it's our cost of goods. We include some variable costs in our marginal costs. So things like credit card processing fees, some fulfillment fees to get that product to the customer, shipping fees. But we don't include overhead costs. We don't include advertising costs because all of that changes based on how many sales that we have. And then we set that marginal cost equal to marginal revenue. And then we solve for the close rate. Once we have that close, which is basically X in this equation, that is now our optimal close rate. We take that back to our demand curve trend line and we plug it into that equation, and that will be our optimal price point to maximize profit.
And so you've got a spreadsheet that turns all of this into an algorithm?
Yep. I have a spreadsheet. I have a step-by-step guide. I also just give a lot more background and detail of kind of why we're doing what we're doing to get to that optimal price.
What are the inputs in that spreadsheet? Just the price and conversion rate for each?
And your marginal cost. Yep. Everything else is a calculation.
And then that spits back, this is ideal price?
Yes.
Or ideal price range?
It is the exact price which will maximize the total profit for your business. Now you can fine tune that because it's just mathematics at that point. You can fine tune that based on, consumer psychology, where your competitors are, and that sort of thing. But it's just a mathematical equation to get to the right price point. There is a correct price to price your product at. It's not a guess.
All right. And so I assume you have applied this process in GlimmerWish.
I have. Yes.
What was the price you were at before you did this? And what was the price you arrived at?
Yeah, we were actually priced lower. So our price point was $18 and it showed the optimal price point was $22. So it's, that's a fairly sizable jump that, if I were just sort of testing out prices, I might have tested $19 if I were just doing this arbitrarily, right? Kind of staying below that $20 price point. But solving for the optimal price led us all the way to 22. And of course, when you then implement this price, you need to see, am I getting that solved for close rate? And yes, we were getting that ideal close rate that was shown in the calculation. So we knew we had confidence that this was the true price. But then it's never done, right? I think one of the most common mistakes people make is that once they set their price, they never look at it again, right? This process of price optimization never stops. You need to be optimizing, at least twice a year because everything is changing. Competitors, the economy, everything has changed. Even your costs may be changing, which would influence the optimal price point.
What do you think? Essentially, it went from 18 to 22. It's a 22% increase. And I assume that ends up being like straight profit. Like if you were profitable at 18 and you're doing the exact same thing selling at 22, that's just a bonus 20% profit that got tacked on there.
Exactly. That just falls straight to the bottom line. And so that's why I think pricing is the most powerful thing that brands can do. I mean, everyone's worried about, paid advertising performance or finding, the latest hack and everything. Pricing is so valuable and so important and can be so impactful to the bottom line. And it's all in your control, right? You can run this test and see if you're at the optimal point already or if you need to make a change.
All right, so I have not known anyone to take this approach and say, hey, let's figure out price elasticity. Let's work out a demand curve here, even though that is intro freshman level economics. what are the alternatives that people are going with? Shooting from the hip, going with their gut. This answer, or like this price feels truthy. What are they doing instead?
Yeah, I think, to be fair, I do think they're putting a lot of effort into it. They're doing research, but it all sort of boils down to a few of the same methodologies. It's competitor benchmarking, it's cost plus, right? They see on Shark Tank, okay, I need a 70% gross margin, so this is where my costs are. This is where my price needs to be. They may be doing value-based, right? Trying to determine what value is extracted, by the customer and pricing there. But ultimately, I mean, these are all flawed strategies because they have nothing to do with what actually matters. And that is the actual price customers are willing to pay for your product, right? This is the willingness to pay principle. So only price elasticity optimization uses this real world buying decision, actual purchases, to get to a mathematical process to calculate optimal price.
I think what's interesting is probably every person listening, if you said, hey, do you prefer data-driven decisions, data-backed decisions? Everybody's going to say yes, of course. Like, no, I just like to roll a die and guess. But when given the opportunity where you say, hey, here's how to do it, this is what it'll take, I think that's where you discover the people who are going to put in the effort. And then even then, you're going to find people who get an answer that's from the data that's different than what they expected. And so they're going to go, well, this might be right for GlimmerWish and Byron, but it's just not right for our brand. And then they have talked themselves out of it, and they're just like, I'm going to go with my gut. And I suppose you can't help those people. They want to do it their way, and that's fine.
Yeah, I don't know.
Thoughts?
I think that there's, of course, everyone is looking at data in their business, but it's typically geared towards traditional paid social performance, or they're doing conversion rate optimization, data analysis, A/B testing, so they look at data in those areas, but for price they say, oh well, this feels right, so I'm just going to do this. But they're not applying that data mentality to pricing. And to be fair, I mean, I don't think anyone knows that you can calculate the optimal price point, right? So this has kind of become my passion project because I know about this process, and I just don't feel that brands know that this is an option out there, that you can take a data-centric approach to pricing like you do in other areas of your business.
And it is possible to do split testing with pricing, but this is a similar, but I think different and better approach. At least, if my college economics background is to be believed. What do you think? What's the big misconception about price optimization?
I think that it's just guesswork. It's just gut feel type of approach. That's the misconception, or that you have to get to the right price through trial and error, right? That it is just sort of an A/B test. And you do hear a lot of people just saying, just giving advice of, oh, just raise your price, see what happens. And that is better than not, looking at your pricing at all. But I think the biggest misconception is that people don't know that you can take a data-centric approach, that you can solve for the optimal price. I think if people knew that this process was out there, they would embrace it, because most brand owners, do want to use data, as you said.
I could tell from the language and the approach, you have a course to sell, don't you, Byron?
I do. I created a course to go over this process. Like I said, really just out of, my love for data, because I do love this stuff, but I do like helping people through this process too. And I feel like people don't know about pricing optimization. So I did create a course. It's called profitprofessor.io.
I like the name.
Thanks. It just walks through step by step this entire process with spreadsheets, like we mentioned, where you can just plug in the data, or you don't have to do those derivative calculations.
And all right, you got to put your money where your mouth is. If you're going to come on here, get us all excited, hot and bothered about price optimization and this approach, because I want this spreadsheet real bad, give us a discount. These listeners, at this point, they listened to 40 minutes of this. All right, maybe 1.5x they speed, 25 minutes. What are we giving them in exchange for their time here?
Absolutely. For your listeners, Kurt, I'd be happy to do 50% discount on the course. There you go. Just use the discount code KURT, K-U-R-T, 50% discount.
Oh, I like it. Thank you. That's good. Kurt, it starts 4 letters, starts with a consonant, ends with a consonant. It's practically a swear word. I like it. Let's see. Okay. And finally, and that's, what's the website again? One more. I forgot. What's one more time?
Profitprofessor.io.
Profitprofessor.io. Got it. Okay. And, all right, final question. This is what we're going out on. Take your time if you have to think about it. What's one piece of advice you would give our listeners about building a successful business? Because you've done it now.
Yeah, I think, for e-commerce success as a whole, there's no magic formula, right? So you have to be rooted in the data. You need to be doing experiments, monitoring metrics, peel back the onion to determine what's truly working, what's not. But fortunately, when it comes to price, there is a magic formula. So, I think while brands may be looking at data in regard to paid ad performance or conversion rate optimization, please expand this data-centric mindset to other areas of your business like price, because you can use it there too. And it's probably the easiest thing you can do to drop profit dollars to the bottom line. And also, I'd be happy to connect with anybody. I love connecting with brands. You can ask me any questions about this as well. You can email me at hello@profitprofessor.io.
Oh, I will include that as well. Very kind of you. Byron, if I need some quality mermaid shampoo, where do I get that?
Absolutely. Mermaid or unicorn, head over to GlimmerWish.com.
Absolutely. Wonderful. Byron Myers, thank you so much.
Thank you, Kurt.